Hey everyone, it is Evan here from the Trade Risk on Tuesday, April 9th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So we're going to jump into our technicals dashboard here. We can see that the major indices were red right across the board today, down as much as 1.35%, led lower by the Russell 2000. Past 5-day change numbers coming back down in towards that zero territory, giving up some of the gains that we enjoyed over the past 2 weeks. But across the key simple moving averages for the major indices, we are still mostly higher. IWM still grappling with the 200 SMA. If we scroll down a bit, we can see 5-day performance numbers. They're still mostly green here, but they are down from, say, last Friday's video recap, where I think we had, 5% plus numbers here for semis. But semis still leading the charge, followed by materials and discretionary. And then on the downside, we have industrials, which are sliding into the red here, with biotech and healthcare right behind it. 5-day performance now, we got volatility swinging to the top end here, rallying 5.69% over the past 5 days, followed by oil, emerging markets. And on the downside, we still have TLT, the dollar, and 10-year bonds. So let's jump into the charts here. S&P 500, this is the weekly time frame. This is the cash market, and you can see here on the week we are red right now, minus 0.47% at the time of recording this, which is of course Tuesday. The week is certainly not over, but we are starting the week on a pullback, and we are about pretty much forming an inside week. We briefly just kind of pushed up slightly, I guess, from last week's highs, and kind of failed there, and are starting to pull back a little bit. It is very much a blip on the radar in this perspective here. We still have this monster kind of V-shaped rally that we've been enjoying for the course of 2019, and we are getting again just that little bit of pullback here. 28.72, that was the bigger reference point that we've been talking about in these videos. That corresponds with the early 2018 highs and the breakdown, the acceleration and the breakdown in October of 2018. So ideally, we kind of hold above 28.72. That would be the most optimistic case, to sort of get a retest of the prior highs up here around 29.40. But we're going to have to see how we finish out this week, and if we can, if we do continue to sell off into the remainder of this week, or if we can sort of stabilize and reverse. You can see that the MACD here on the weekly chart still making new highs here, along with price on this recent rally. So let's go down to a little bit of a shorter term look here, the daily chart for the S&P 500. And we'll look here at this week's action. Of course, last week we enjoyed this nice rally, the gap and go sort of week last week. We had Monday's gap up. We continued to rally throughout Monday, and then we basically just grinded higher all the way throughout to close out Friday. We came into Monday with a small gap down, and then bulls kind of stepped up, bought the gap, and closed us fairly strong yesterday, and now we're kind of right back here, giving it right back up, or testing the prior 2-day lows here around 28.80 and going out near the lows of the day on Tuesday. So it looks like the market is a little bit heavy here in the short term, that it wants to sort of rotate or probe these lower prices. It enjoyed a nice rally last week. It spent kind of these 2 days here, made a good attempt yesterday at soaking up some of those early losses, and it would have been ideal to see us kind of continue to hold up or push higher here on Tuesday, but we got the exact opposite. We kind of broke down and closed below these prior 2-day lows. So seems like the market may come in here just a little bit. We want to see how it reacts tomorrow. Of course, follow through selling has always been problematic this year, and we're going to see if sellers can get a little follow through tomorrow for at least a short-term type of pullback here. Short-term pullbacks can lead to longer-term pullbacks. This could be the start to the big down move, but of course, if you've been calling for that all year, the market has basically just grinded higher in your face, so it's tough to fight the overall trend. But in the short term, we're seeing a little bit of waning here, and we'll see if we can follow that up next session. Now, if we look at the IWM, I think this is where you could certainly hang your hat on a little bit more of the pessimistic in the short-term view, where we have the Russell 2000, which had been lagging here over the past month and a half. It was the first to pull back. It pulled back a little bit, or the most in magnitude. And of course, this pullback, as we discussed in last Friday's video, is well contained and well within the realm of still a strong market. A market that has enjoyed a 30% rally off of its lows is, certainly in my book, allowed to pull back 7 or 8% and mostly through sideways time. That is entirely healthy, but there's still tradable opportunities in between. And the IWM today down 1.21%, kind of lost this series of lower lows and lower highs that we were watching. It poked its head up above it last Friday. It stalled out here yesterday, kind of chopped around, and now it's starting to break down from yesterday's and Friday's lows. So we're kind of falling back below this pivot. You could draw this short-term trend line here and say that it's breaking the trend line, breaking this horizontal level, and it looks like, in the short term, again, it may want to kind of fall back into this old range, maybe get down in 150 or so and test these lows to see if they can still hold us. IWM here looks the weakest. We're actually looking for a potential kind of short-term tradable short opportunity here, perhaps tomorrow. We'll see if we actually get what we're looking for, but again, does not suggest that we are all in on the bear case here, looking just for a short tradable opportunity there. On the NASDAQ 100, you can see here we are still mostly resilient in this index. It is still kind of stalling out here near highs, but of course, if we start to break down here, then of course, after going kind of 4 days sideways and tight right near highs, if we start to roll over, that of course would put some pressure on all of the broad US markets as well. So be interesting to see if the Qs can kind of buck the trend here. If the IWM does continue its breakdown, can the Qs soak up some of this rotation and hold ourselves up? That's going to be sort of what we want to see for the rest of this week. So all in all, I think the bulls still on the intermediate term basis still very much have their grips and hold on this market in an uptrend. But in the short term, it does look like we have a little bit of a heavy sort of rotating market, if you will. The VIX kind of getting a little bit of rotation here as well, above $14, 7% pop today off of the 1260 lows that it made just a couple of days ago. So we get a little bit of cross currents here in the short term. We'll see if sellers can get follow through. We'll see if we can get some short-term pullbacks to kind of hold throughout the end of the week. Now, getting into some of the other markets here, we'll go to TLT next, which is down or basically flat here on the week. It's an inside week so far. Remember last week we finally started to break down and pull back, and we talked about this, this 123 area. This would be the ideal spot to hold for the bull case here, kind of retest this breakout zone from just a few weeks ago. So far that does seem to be holding. It is early, so we don't want to claim an early victory here, but bulls so far holding above this general area, which is what you'd want to see them do. USO here on the week is still up 1.37%. You can see it is finally starting to get a little bit, frothy or accelerated in its slope here over these recent weeks. It's been grinding higher all year. It did go kind of grind to a halt here and go sideways for a few weeks in early to mid-March, but you can see here on the daily chart, it has picked up some momentum as it has come back into some prior kind of overhead supply areas from back in 2018. So I would expect to see a little bit of, kind of resistance, reluctance here for the market to continue to chew through here, but the trend is up. MACD still making new highs. So these are things that are, typically speaking, tough to just jump in front and blindly short. So for me, it's just kind of a no trade and watch how this all develops. But I would expect, just general speaking, some reluctance up at these areas here, but I wouldn't want to step in front and just kind of blindly fight this momentum at this time. Wait for a trend line break, wait to take out a prior day's lows. Those are usually the kind of key things that I look for in the short term. Natural gas here is stabilizing, is attempting to stabilize. It's up 1.4% on the week. It is still within last week's range, but you can see it's up above where we closed and starting to get a little bit of rally here off of these lows, and it's kind of doing it on some positive momentum divergence from where it was back earlier in the year. So some signs of life for natural gas, but overall, it's very much been in the penalty box just because it's been in more or less this downtrend here for the course of the year, while some of the other commodities have been enjoying some nice rallies. I mean, just USO, which is what we just looked at, and other areas of the market as well. So continue to monitor this. We'll see if it can close out the week strong, get the MACD back in positive territory, break above 2450, and all of a sudden, we'll have some signs of life here for natural gas to hang our hats on. Last but not least, we have metals. Metals here, we talked about in Friday's video, kind of the bullish divergence that was setting up here on the retest. We're still waiting to see if we can kind of invalidate this potential topping pattern here, but for so far, the bulls held this 121 area. We're getting a bounce off of it. We'll see if we can close the week strong and hold on to support. And silver is very much in that similar boat here, holding a very important $14 breakout area, which it did experience in early to late 2018. And that's where we're really going to want to see this hold above if we're going to remain at least neutral, but optimistic to neutral here in silver. It's got to hold above $14 in my book. So that's the recap for the 9th of April. Hopefully you guys are doing well out there. Thanks so much as always for tuning in and watching. You can subscribe to our YouTube channel, follow us on the Trade Risk, check back every Tuesday and Friday for our market recap videos. Have a good rest of your day, and we'll talk to you in the next video update.